We can go to Jameel Ahmad, Chief Analyst at GTC. Good morning, Jameel. Many markets around the world are closed today because of the Easter holiday, but can you give us an overview of the global markets as they stand?
Well, many financial markets might be closed for the Easter holidays, but the Easter egg bunny has left another good present for those gold bulls because the gold prices have hit a new record high, all-time highs in the early hours of Monday trade, now at $3,385 US. It's astonishing that gold prices are up a further 25% already year to date, when they already had a fantastic last year as well. Essentially, global financial markets are a little bit more cautious. I would say some cautious optimism on hopefully some trade deal hopes starting to make headlines this week. You've got a number of different Asian economies that are supposedly, if you believe the headlines, reaching out to Washington regarding the tariffs that were put in place earlier this month. Also, we had a statement from the White House, particularly some comments reported from the US President Donald Trump, that he is talking and they are talking to Chinese counterparts about the current tariffs that are in place. Let's see where those headlines go. Even though Easter holiday is going to lead to thin trading volumes and so forth, we still have to watch out for these risks because nobody can say anything about what's going to happen next when it comes to these tariffs and these other headlines of uncertainty.
And we saw last week US President Donald Trump attacking the Fed Chair Powell over Powell's decision not to cut interest rates. What might this mean for investor sentiment?
Yes, so following up from the previous question where I said that nobody knows what can happen next, and that's the exact same beat of the drum that we saw on Thursday afternoon. So essentially, the European Central Bank, the ECB, they cut interest rates once again in 2025, citing trade war concerns and general pessimism about the European economic outlook. And shortly following this, you had a tirade of different tweets and attacks on the Fed Chair Jerome Powell, specifically from President Trump. We now have some headlines coming through that the Trump's team are looking in towards whether they can dismiss the Fed chair. I see that as unlikely. We have been here before during the first presidency where the President of the United States back then, Donald Trump, would routinely call out the Federal Reserve on interest rate policy. At the moment, it's a headline. Markets won't move too much to this, but it's a huge concern for central bank independence. And with that in mind, it does lead to another potentially dangerous headwind for global financial market volatility, because if financial markets and investor sentiment do start to get upset or sensitive about the potential for the White House to be influencing central bank policy, it's not just world financial markets that would be in the firing line. You have the US dollar, you have concerns over central bank policy worldwide and whether there could be political interference. Let's hope we do not get to that point, but we definitely span towards an interesting direction last week from those very public comments.
And what are the key data that we might want to watch out for later this week?
So we have earnings from the likes of Tesla and Alphabet, which of course is the parent company of Google. That's out later this week. But specifically, I'm going to be watching the IMF because the IMF are scheduled to release their biannual economic outlook on Tuesday, which is of course tomorrow. Do not be surprised to see a world economic downgrade based on the tariff uncertainty and these trade wars that are taking place. And I think that's probably going to beat the drum and the tone for where we're going to head for in sentiment next week.
Thank you very much for that, Jameel Ahmad, Chief Analyst at GTC. And it's time now.